And this period right now reminds me kind of very much of the 2018, 2019 period where gold started moving first. I mean, look, gold is widely distributed around the world. 8 billion people, everyone knows what gold is. And when geopolitical trouble arises or inflation is imminent, gold tends to smell it first.
Yeah.
And I recall quite clearly in that time frame that gold started moving in the 2019 timeframe, and Bitcoin didn't start moving until the 2020 timeframe. Now, having said that, when Bitcoin did move, it moved with great authority, and it absolutely crushed the returns on gold.
There's been a lot of excitement in the cryptocurrency industry over the past 24 hours. Bitcoin topped $31,000 on Monday, which at the time was the highest level since mid-July. However, the rally had only just begun. As the day progressed, the leading crypto asset swiftly took out $32,000, $33,000, $34,000, and $35,000, hitting levels not seen since before the Terra Luna collapse in May 2022. The reason for the sudden, yet much-awaited upside rally is not far-fetched. According to several credible publications, including Bloomberg, the rally is a result of heightening optimism regarding the impending approval of BlackRock's spot Bitcoin exchange-traded fund. Since the leading asset manager submitted an amendment to its initial application, there has been a flurry of activities from BlackRock. Many Bitcoin investors are taking these activities to mean that the U.S. Securities and Exchange Commission is not only going to approve BlackRock's application, but also that it is very close to doing just that. According to renowned sound money advocate and money manager Larry Lepard, the Bitcoin rally is more than just a BlackRock pump. During a recent discussion with Kitco News, Lepard called the Bitcoin pump, stating that the little rally we saw with gold last week would be followed by a more significant Bitcoin rally to the upside. Lepard is attributing the sudden jump in prices to the heightening geopolitical tensions around the world. Lepard's sentiments about investors seeking safe haven assets during such moments of uncertainty bring to mind similar comments from BlackRock Chief Executive Officer Larry Fink. While speaking with Fox Business last week, Fink explained that he is getting more calls about Bitcoin and other cryptocurrencies as investors are massively seeking a flight to quality. Going by Lepard and Fink's remarks, this pump is just starting. In addition, the combination of the ETF, geopolitical tension, and the obvious decline of the fiat monetary system will make Bitcoin one of the biggest stories of the next few years at the least. We will now bring you clips from Lepard's interview with Kitco News. Please watch, share, and like this video. Also, ensure you subscribe to the channel, turn on the notifications bell, and don't forget to drop your comments and observations in the comments section below. Thanks and enjoy the video.
The CME FedWatch site is now saying there's a 2.8% chance of a rate increase in November at their November meeting, and there's a 97% chance that the Fed is not going to raise rates. So I think the argument we could make here, I would make, is that there's a high probability that the Fed is done because they know that if they continue to raise rates, they're going to break the bond market. And they may have already broken it, but they're going to break it to a point that it's really irreparable. So I think what we're moving towards is monetary easing. And I think that's what gold smells. Now it's hard because gold also smells, war. And gold always goes up when there's instability in war. So you kind of got two things acting on gold. But if one goes and looks at the gold chart, I mean, we can see that, I mean, in a very, very short period of time. I mean, this was not but 10 days ago, gold was trading at $1,818, and now it's at $1,940. I mean, it has gone up a lot in a very short period of time. And that's a combination of the war and I think also sniffing out the underlying problem in the bond market. It's interesting. Bitcoin, it's not as widely distributed, and I consider it to be a safe haven asset because I think it's a distributed non-bearer secure bearer security that can't be messed with, and so I think it's safe haven. But it's still being adopted, and therefore it's relatively volatile. And this period right now reminds me kind of very much of the 2018, 2019 period where gold started moving first. I mean, look, gold is widely distributed around the world. 8 billion people, everyone knows what gold is. And when geopolitical trouble arises or inflation is imminent, gold tends to smell it first.
Yeah.
And I recall quite clearly in that time frame that gold started moving in the 2019 time frame, and Bitcoin didn't start moving until the 2020 time frame. Now, having said that, when Bitcoin did move, it moved with great authority, and it absolutely crushed the returns on gold. And as you know, and as you and I have discussed, I believe Bitcoin is the faster horse and a better long-term hold. But it's not for everybody because not everybody can tolerate the volatility. I mean, I have clients, their 70s, 80s, and 90s, and they don't want to have 70% drawdowns. And therefore, I manage a fund that's both gold and silver and Bitcoin. But the point is that Bitcoin, will get there, and it will move, and it'll move hard. But it tends to sometimes lag gold, or at least on the last couple of cycles. That's what I've observed. As you also know, I'm sure you'll point out, the ETF approval is a really big deal. I mean, notice how much it bounced just on the rumor.
Mm-hmm.
I mean, the ETF approval will bring a lot of money into Bitcoin. And Michael Saylor does an excellent job of making the point that it's very rare that you see an opportunity like this where there's a lot of money that's going to come buy an asset, but it can't buy it today because, in fact, I was just talking to a very, very wealthy individual earlier today. And I said, have you bought Bitcoin? He goes, no, I know I should, and I really want to, but I don't want to get a Trezor. I don't want to do cold storage. I don't trust myself to manage the keys. I don't want to put it on an exchange. I'm just waiting for the ETF.
Mm-hmm.
And I thought, okay, yeah. And you know what? I think there are a lot of people who fall into that bucket. I think that the United States is kind of living in a false narrative world of everything's okay. The bank thing that they stuffed back in the corner and into the can. I thought it was all over with Silicon Valley Bank, but of course they patched that up. But that problem is still there. There's still $600 billion of commercial real estate losses in the regional banks, and arguably half of the regional banks have no equity left. So something is going to break. One of these rivets is going to pop, and the stock market is then going to break. And then it's going to cascade, very similar to the way it did in 2008. The point is that when we get into that collapse, an outright collapse, and I think that's probably what will happen. There could be a correlation of one, and Bitcoin could go down quickly, and gold could go down quickly. But in turn, the response from the Fed would be overwhelming. Their balance sheet would be taken to 20 trillion.
Lepard is certain that the United States economy and possibly the entire global monetary system is on the edge of a big collapse. In his words, something is going to break, which will cascade through the economy in huge waves, beginning with the stock market. The investment manager believes the coming collapse will be similar to the events of March 2020. Just like it happened then, he is also certain that the Federal Reserve will step in and print like it has never done before. During his conversation with Macquarie, Lepard reminisces how bad everything was when the pandemic struck and how swiftly everything turned around in the financial markets after the Fed stepped in. He expects pretty much the same chronology of events now. A catalyst which sets everything off, a significant drop in prices, a massive Fed pivot, and then a sudden jump in prices. As a sound money advocate, Lepard believes in the importance of assets like gold and silver, alongside Bitcoin, which he agrees is the fastest horse in the race. Let's get back to the interview as Lepard speaks about the similarities and differences between gold and digital gold.
I love them both, okay? Gold is analog sound money, proven, 5,000 years old, and it was the best form of money that existed in the world until Bitcoin came along. And it is still less volatile than Bitcoin. And for some people, that's a real advantage. They don't want to ride the up and down cycles within Bitcoin. If you look at the actual characteristics of Bitcoin as money, and it is being adopted as money, in my opinion, it beats gold on just about every front. It's easier to store. It's easier to transfer. It's easier to verify. It's more easy. It's easier to divide, etc. And so I think when the people who set up the Bitcoin network, and I do think Satoshi was a group of people who then decided to go silent. I think I've met a few of them actually. When the Bitcoin network got developed, something important was developed, and sadly, a lot of gold people think, all this crypto stuff is bullshit. And you know what? They're right. All crypto stuff is bullshit except Bitcoin. Because what Bitcoin did, what that system does and did, is we created legitimate, provable digital scarcity. And before that time, that had never existed. So this is an invention. It's like when the Wright brothers created an airplane, they created a device that would allow human beings to go up in the air and travel. And, from the Wright brothers to, the Concorde, was a bunch of years, but it was amazing the developments that took place. And you might ask, well, why does digital scarcity matter? Digital scarcity matters because the most important characteristic of sound money is that it's scarce. And until Bitcoin came along, gold was the element in the universe that was most scarce. The supply only grew at 1.5% a year. It was verifiable. I mean, admittedly, you had to sometimes X-ray it so that it didn't have tungsten inside it, and had problems in verifying its purity. But But suffice it to say, there was no other element like gold, and that's why 6,000 years of evolution, it became kind of the preeminent form of money. Bitcoin, in my opinion, is really just digital gold with better characteristics. It's extremely portable wealth. I mean, what I mean, obviously, if you were in Germany in the 30s and you wanted to get out, having gold coins was really good because you could bribe the border guards or whatever, or use it for your travel expenses. And I still say that. I mean, I think gold coins are very useful because, there'll be people who probably won't accept Bitcoin when you got to pay bribes. But, in the end of the day, I think Bitcoin is the superior form will become the superior form of wealth. I also think, both of these assets are going to increase in value significantly as paper money, fiat money gets debased and destroyed. But you've got, as Paul Tudor Jones says, Bitcoin's the fastest horse in the race. The reason for that is that it's got two things going on. It's got one, paper money is being destroyed. That's going to make gold go up, because it's traditional money. That's going to make Bitcoin go up. But two, it's got an adoption curve. And so we've just kind of passed the Gladwell tipping point where, 10+% maybe of the developed world owns Bitcoin. And as we've all seen those adoption curves, cell phones, radios, TVs, whatever it might be, any new innovation, it kind of tends to take the amount of time it took to get to the 10% is the amount of time it takes to get to 90%. So I think in the next 15 years, Bitcoin is very likely to become the soundest reserve asset in the world. And if that's the case, and there are 8 billion people in the world, there are 21 million coins, I mean, the price per coin has got to go up a lot. One other thing I will say about Bitcoin that I think people don't understand, and this is part of the innovation that's really important. Think about Bitcoin's a commodity, right? The SEC said it's a commodity. It is a commodity. One coin's the same as the next. Okay, fine. Every commodity in the world, if you increase its price, the supply goes up. If gold went to 10,000 tomorrow, we'd mine more gold. If corn went up, if oil went to $300 a barrel, we'd drill for more oil. You would get more, higher price, you would get more. No matter where the price of Bitcoin goes, the issuance schedule is set.
After breaking $35,000 on Monday, Bitcoin dropped slightly to around $33,900 on Tuesday, but it again picked up pace. As of press time, the leading crypto asset is trading well above $34,000 and could easily recapture $35,000. Do you think the rally will be sustained and this moment will mark the final end of crypto winter? Please drop your comments and observations below. You can also help us get this video to other people by smashing the like button, subscribing to the channel, and turning on the notifications bell for more videos. Thanks for watching our videos.